In this brief video, I want to talk about inflation and what's its effect on corporate earning. June CPI come out as 9.1% on Wednesday. We can assume Federal Reserve will be even more hawkish on controlling inflation, and the analysts see a higher probability of 100 basis point increase in July FOMC meeting. An earning recession is coming as the Fed hikes rates, which will push economy into a recession. However, despite economic growth already shows sign of weakness and inflation running at the highest level in 40 years, plus Fed moving aggressively to tight monetary policy, some Wall Street analysts continue to suggest strong profit margin and rise earning into 2023. But earnings is positively correlated with the economic growth. Take a look at this chart. The US economy through 1930s to grow 6% roughly to now. Earning growth running aligned with the long-term economy growth rate. However, analysts on Wall Street suggest that earning growth into 2023 will run well above the historic economic growth rate, despite forecasts of much slower economic activities. From this chart, we can see that only two previous periods with similar deviation happened. These are the financial crisis in 2008 and the dot-com bubble in early 2000. As we said before, earnings is positively correlated to economic growth. While the inflation speed up, corporate either pass on extra costs to consumers or absorb the price hike for the raw material, which results in producer price hike. Eventually, high cost of producing goods will negatively impact earning and profitability. On top of this, Fed rise interest to control inflation, use high price to fight high price of everything, which put more pressure on corporate to find a way to reduce costs, such as cutting jobs. Job cuts will increase unemployment number and result in consumer spending contractions, which also put economy further into recession and corporate earnings slash. All of these indicate that investors in the market really must take more cautious and defensive measure to hedge against the market downturn. Use some common strategies such as synthetic short option strategy to protect stock you currently own but don't want to sell, or keep most cash if you don't feel comfortable owning any stock right now, or simply just buy put options or sell call options. The downturn of economy will eventually pass, and in the meanwhile, invest safe.